How did China become the world's second largest economy? It all goes back to 1978. That's when Deng Xiaoping was in charge. Today, he's known as the architect of modern China for the major reforms he pushed through. But even he might be surprised by the scale of change unleashed. By opening up to trade and investment, China kickstarted a 45-year transformation that took it from a largely agricultural society to the economic powerhouse we know today.
So even though there's a lot of concern about growth here in China, I think it's important to remember that the economy is still growing. In the first half, the economy grew 5.5%, and most economists are still expecting China's GDP to increase by about 5% in 2023. For any other country, they would be ecstatic by a growth pace of that speed. But here in China, the problem is relative to the past. Now, I've been a journalist here in China since 2003, and back then, regularly, the economy was growing 10%, 11%, 12%. In the second quarter of 2007, the economy here grew 15%. And so relative to that, it feels much slower now.
The major problem here is that, China's moving off its old economic growth model, but it hasn't moved comfortably into what's next.
China's economic model has been incredibly successful at providing low-cost goods to the West. That's lifted hundreds of millions of people within China out of poverty. And the model continues to do that. But what it seems to be struggling with now is getting past that middle income trap. A lot of this infrastructure investment in particular has led to a lot of overcapacity, and it's led a lot of these local governments to take on debt that they haven't really been able to figure out a way out of right now.
Restoring confidence is key. Businesses have been battered by years of pandemic controls and crackdowns that Beijing is now struggling to unwind in a bid to bolster growth. The first sign of trouble came in China's tech sector in November 2020.
All we know so far, China has suspended both the Shanghai and the Hong Kong IPOs.
Fintech giant Ant Group, a unit of billionaire Jack Ma's empire, was gearing up for what was set to be the world's biggest IPO. But just days before going public, Chinese authorities pulled the plug. That started a chain of events that shook the markets.
These were unprecedented, sweeping clampdowns on the private sector, everything from property and education, as well as technology. That wiped out billions in market value for many companies, as well as the wealth of certain billionaires too.
To reassure investors, Beijing has been sending the message that it's back open for business with the world, rolling out the red carpet for the likes of JP Morgan's Jamie Dimon and Elon Musk after years of a tough operating environment under Xi Jinping.
But the Chinese government knows that getting the private sector back up and running is really critical if it wants to restore growth in the economy.
Challenges on the diplomatic front, especially between China and its great rival, the U.S., have also made investors wary, clouding the economic outlook. Despite U.S. officials flying to Beijing in recent months to reset trust and ties, the two superpowers remain at odds over issues ranging from Taiwan to access to high-end tech.
Already we're seeing a move to, the U.S. would say, de-risk from Chinese supply chain. There is an increased move among Western multinationals to try and address that by buying more of their goods from places like India or countries in Southeast Asia. But if the relationship with the West is going to cut China off from some of these key new technologies, that's going to be trouble in the long run.
The U.S. and China are the world's two biggest economies. The value of the trade of goods between them surpassed $690 billion in 2022.
I think the Chinese are concerned about sluggish growth in their economy.
So that relationship between the U.S. and China, whether it be trade, manufacturing, you name it, has been hugely beneficial for both economies, and it has huge spillover effects for the rest of the global economy.
China is hugely important to the world because it is such an important end consumer for products, especially in the commodities and energy world. So if China's economy is not going to recover the way that the world had hoped, it's going to mean other countries, they're going to find it harder to find markets where they can sell their goods and services to. In a connected world where we live, that's going to have a ripple effect across the globe.